Good afternoon, everyone. Good afternoon. Welcome to The Forum, a weekly program of the Columbus Metropolitan Club where we cultivate conversations and connections that truly drive our region forward. My name is Sophia Pfiffner. I'm the president and CEO of the Columbus Metro Club. And thank you for those of you who are tuning in through live stream. We're here at the National Veterans Memorial and Museum in downtown Columbus. Thank you so much to our fantastic sponsors for today's conversation: Bank of America, Charlie Pratchett and Murphy, Mead & More, JPMorgan Chase & Company, and Taft. Additionally, we'd like to thank Downtown Columbus Incorporated for providing today's complimentary parking to all of our guests in person today. Thank you for the presenting partners of our live stream, the Center for Human Kindness at the Columbus Foundation, and our live stream partner, the Columbus Dispatch. We're so incredibly grateful to the National Veterans Memorial and Museum for hosting us. This is such a great space that has such a great mission and theme around service and veterans. So it's wonderful to be part of a building that so deeply connects with our personal mission here at the Columbus Metropolitan Club. And yes, every CMC forum takes a village. So we'd like to thank you for joining us today and creating a conversation and a space for dialogue. Today's forward-looking conversation is Money Movers, the bankers fueling Columbus's future. We'll unpack how Central Ohio's banking leaders are navigating change, powering our economy, and helping this region grow. To introduce our speakers, please welcome Tony Anzik with today's sponsor, JPMorgan Chase & Company. Tony, welcome back to CMC.
Thank you, Sophia. It's great to be back with CMC. And how nice is it to be in this beautiful museum, everybody? This is the national, emphasis intended, Veterans Memorial and Museum. I'm a proud Navy veteran. I'm proud to be on the board here. So please come back. Come back during the weekend. Come back during any day. Ask some of the staff, the great staff, they'd be happy to give you a tour. So let's get started. Good afternoon. As Sophia mentioned, I'm Tony Anzik. I'm a 27-year JPMorgan Chase employee. I'm here in Columbus, Ohio, and I am the location manager for our Columbus operation. On behalf of more than 18,000 of my colleagues in Central Ohio, it's an honor to introduce this forum, Money Movers, the bankers fueling Columbus's future. I'm excited to kick off this important and impactful conversation on the role banks play in our community. I know my colleagues very much know that. I know I can speak for my employer when I say that our team takes this job very seriously. For more than 210 years, JPMorgan Chase has worked with government and community leaders in Ohio, many of you, to help drive and sustain economic growth, and we're proud to call Central Ohio our home. We're also proud of the firm's work supporting our veteran community, being a veteran myself, as I mentioned, making today's venue so very fitting. As a proud Navy veteran and a board member, this place truly feels like home. I've been here a million times. You should know that there was so much interest in today's discussion that we needed this much bigger space, and hence why we're here. And the greatest parking in maybe downtown Columbus, right, friends? Supporting our veterans is one of the many ways that JPMorgan Chase uplifts its employees and the community at large. I'm proud to say that my firm has hired nearly 20,000 veterans and currently employs more than 3,000 military spouses nationwide. And here in Ohio alone, we've hired more than 2,400 veterans since 2014. We know that this is not only the right thing to do, and Jamie Dimon, our chairman and CEO, says this all the time, but it's good business. From initiatives like this to financing commercial development and small business and supporting home buyers and housing projects, banks are doing it all. We're helping shape the future of Central Ohio, and I'm very excited to introduce today's panelists. First, my colleague, Becky Griffin. She is the head of home lending, servicing, and support operations at JPMorgan Chase. I've known her for years. Proud to introduce Brian McDonald. He's the market executive for Bank of America. Also, Jordan Miller, Air Force veteran, my brother, chairman and CEO of Adelphi Bank. And Ilaria Rawlins, I've been following you on LinkedIn since the early days. I'm so excited to meet you. She is the CEO of Fortuna Bank. And Derrick, I'm going to hand this off to you, sir. Our moderator, Derrick Clay. He is the president and CEO of the Columbus Chamber of Commerce. Derrick, all yours, sir.
Good afternoon, everyone. How's everybody feel? Good, good. I'd like to, first of all, thank Sophia Fiftner and the CMC family and all of our panel for your contributions today. And I also would like to thank our audience, both here live and online. Now, we all know that the Columbus region is rapidly growing. I'd like to get some big picture context on how banks play a role in that, right? So if you could answer for us, explore how banks contribute to Central Ohio's economic growth, the key role that they play, and what an economy would look like without banks. And I'll start with you, Ilaria.
Great, thanks. First of all, thanks for inviting me to be here. I'm thrilled to be on the panel with the rest of the team here. Banks really, at the end of the day, are the backbone of every economy, from the largest banks to the smallest banks. And that's where we think banks like Fortuna Bank, the newest startup bank in Ohio and really in the United States, can make an impact on a much different level. We help small businesses, we help the local communities, and we really, every deposit dollar that we take in, we put back out into the community, helping small businesses grow.
Thanks, Derrick. Thanks for the question, and great to be here as well. The banking is kind of the lifeline, the circulatory. You think of your body as the blood flowing through your veins. That's what banks are to the economy. We supply, much needed financial support in the form of payments and credit. Obviously, bundling your deposits to lend to projects that are of interest to you, to your family, making mortgages for you. Just think of the world without banking. Well, years and years ago, when there were no banks, the guy with the cattle came to get the wheat. And he said, "Okay, I'll give you one cow for 2 bushels of wheat." That was the barter system. So banks have always existed in some form, but now banks are much more digital, and money moves more seamlessly than that. But you don't need to carry dollars in your pocket because you've got access to payments. You've got a card in your wallet. But banks are kind of integral to everything that's happening behind the scenes. We're not the movers. The community is the mover. We just support the things that are going on in the environment.
Great. Brian, you have some insight on that?
And beyond just the capital commitment and the deposits being held by banks in the local communities, you really got to think about who is employed at banks and who is part of the community. So at B of A, we have our table here. We have 690 employees across the state, over 50,000 volunteer hours. It's just a significant impact on the community. And Becky here obviously has a lot more than that, and she's probably going to tell us all about that. But when you add up the entire industry, from the small banks to the big banks and kind of all the banks in between, our fantastic regional bank partners, it goes beyond just the capital being committed, and it really is about the people in the community who are spending their time with not-for-profits, who are spending their time with businesses, helping them to grow every day.
Great. Becky.
I didn't want to come in too strong with the 18,000 employees, but you're absolutely right. We talk about our time, our talent, and our treasure, and the ability of us to give back to the communities that we operate in. And I think the question is really interesting when you talk about imagine life without banks. And so talked about bartering and things, but I was going to use the money under the mattress analogy. And our ability to grow even as consumers and as businesses, and having access to a safe place to store our money and then lend out responsibly to allow for the type of growth that, frankly, we're seeing right here in Central Ohio.
Sure. And you brought up a great point. So when you think about the makeup of our panel, you got 2 larger banks that are national banks. You got 2 smaller regional banks. And so my next question talks about that a little bit. Reflect upon how institutional size influences strategy, your risk, and community engagement. And anyone can take that question.
Sure. I mean, I can start from the large perspective, and it may be obvious, but being such a large bank, we're certainly competing. We have deeper pockets, but we're also competing with the need to deploy all of those resources, not just here in Central Ohio, but across the entire country as we operate in the 48 contiguous U.S. states. And so making sure for us here in Columbus that a New York-based bank finds Columbus relevant and continues the investment, again, in time, treasure, and talent here right in Central Ohio is something that we're really focused on. And the risks are different. So the risk for us is we are a really large, safe and sound institution, which has its upside, and on the other side are then subject to a lot of other risks. I know we'll talk about things like cyber, et cetera, later, that puts a bigger target onto our backs. And so balancing those things is something that we're really focused on.
Yeah, I think from the smaller bank perspective, our strategy is very different. We really look at building kind of those intimate connections with people. We often say we can't out-shout Chase or Bank of America. We don't have the deeper dollars, but we can actually spend time with people, creating connections, helping our clients and our community build networks so that there are resources within each other. And that's where we really feel like we have really a great opportunity to hold hands with the community and move together.
Yeah.
Go ahead, George.
And I would just add that if you look at any community, you look at the big streets. You look at Broad Street, you look at High Street. That's where these guys play. We play behind the scenes in smaller areas, harder to reach niche areas that we're focused on. We work with a lot of the larger banks, and they give us technical assistance. They support us. They do many things. We have access to their ATM networks, for instance. But at the end of the day, our ability to be nimble in the community where people live every single day, those folks that walk into our branch, I can name almost every single customer that comes into our bank. So that's kind of the difference. But we both play a very significant role in the growth of any community.
And let me piggyback on that a little bit, because I know that we talk a lot about community when we talk about banks. Share how your banks shape neighborhoods, commercial corridors, and promotes equity.
I'll start there. When you think about what our mission is and what we're trying to do in the community, it's really about serving the basic needs as well as workforce development. So we don't try to be everything to everybody at Bank of America. We pick our spots where we want to be, and then we partner with great community partners, as I'm sure everybody up here does. Columbus State, for example, is a fantastic partner of ours on the workforce development side, and we're very happy to support them. Beyond supporting the individual organizations, again, it comes down to the individuals on our team who I bet you everybody in here probably has a not-for-profit or some kind of community organization that they're working with. And at Bank of America, we really spend a lot of time and we spend a lot of effort making sure that everybody gets involved in some community organization. We not only encourage the volunteer hours, but we also allow people to do that during work hours, and we offer a match program to encourage people to put their dollars in the community and really kind of back up what they're trying to do out there.
Yeah, absolutely.
Another example I'd love to highlight here in the Columbus community is we have a community center concept where we go into low-income neighborhoods across the country, and proudly opened in Linden earlier this year. Our CEO, Jamie Dimon, was in town for that ribbon cutting. And those community centers are really intended, to your question around equity, to make sure that we are truly the bank for all. We obviously play in the space of affluent clients all the way down to those who need a little bit of financial help and coaching. And so those community centers give back through having community events focused on fraud prevention and scams, access to savings tools, access to credit monitoring tools. And so really just trying to think differently about how we can really show up across the wealth spectrum in the communities that we serve and meet the distinct needs of each individual neighborhood that may be different kind of just across the street.
Sure. And, we're going to switch gears here in just a second. I had the pleasure Friday of going up to the Federal Reserve Bank of Cleveland and got a chance to hear Beth Hammond and one of her talks. I serve on that business advisory board, and one of the things that she talked about at length was interest rates. And when you think about interest rates and you think about the economic output, discuss the local impact of interest rate trends and how your institution is preparing for those.
I'll jump on that first, I guess. Obviously, we've been operating in what they call a high interest rate environment. I don't really see it that way. I don't think interest rates have been super high. I remember my first mortgage was 11.5%, and I stood in line for 2 days almost to get that loan. Today, interest rates are, the overnight interest rate is really what's changing, and the Fed just dropped it 25 basis points. I don't think it has a huge impact, but it may give a business owner that's borrowing money a chance to get that loan. That makes the debt service more easy for that person. If you are tied to a home equity line, your equity line is probably tied to prime rate. It's going to drop a little bit. It's going to free up a little bit more cash for your household. So I think overall it's a good thing for the rate environment to change a little bit. But there's a lot of trouble out there. So one of the challenging things with the interest rate, we know that the labor, but we're not creating jobs right now. And on the other side, inflation's going up. So the mandate of the Fed is is employment, and it's also maintaining inflation, and so there's a dilemma. So I'm not sure what the outcome of this is going to be, but that's a big challenge for the Fed right now.
Absolutely. Other thoughts? Yes. Brian.
So interest rates, it cuts both ways. If you're borrowing money, lower rates are fantastic, right? Lower HELOC rates, lower business rates, and if they're at zero, that's certainly better than if they have 5% on the base rate. If you're a consumer, you're a retiree, and I'm sure we have a few in this room, your money market funds, your T-bills, your bonds are now earning less, and your retirement income is now a lot less than it used to be. So it cuts both ways. I think at the heart of the issue, and where we spend a lot of our time with clients, both consumer and on business side, small business to the very large businesses, much like our institutions here who have operated through pretty much every business condition out there, you have to plan your life, you have to plan your business for any type of interest rate environment that comes up. And that's where we spend a lot of time. What happens if interest rates go to zero? What does your business look like? What are you going to do? What are you going to do individually? What happens if interest rates go to 10%? Same concept. You have to be ready for all environments, good and bad.
Sure. Absolutely. Any other thoughts before we move on to small business and entrepreneurship? All right. Can you highlight some of the challenges and the opportunities in small business lending in this environment?
Go first. I think what I see, and I think really why Fortuna was intentionally created, is we see banking is in the midst of really a radical change and a lot of automation, which is great. It's great for efficiency. It's great to be able to get a large number of deals through. But I think what we also lose, though, at times is the ability to connect directly with the client and to listen to their story and to hear the story. And so where we like to spend time and again, is just kind of holding the hand and listening to the story. And so I worry for business, especially the small business owners who are wearing 75 different hats, maybe a little bit like I am and Jordan are right now in trying to operate a business, is how can we help them and hold their hand, listen to the story, and make sure that they're not lost in the numbers. And I feel like that's a real challenge.
Small businesses, obviously, they're the key to the growth. They hire more people. Every time we get capital to them, that allows them to hire another employee. It allows that employee to maybe build a house or to buy a car or spend more money or to take care of their family. So small businesses are obviously very, very important. They stay behind the scenes. They're being impacted by a lot of uncertainty, though, right now. With the interest rate environment we talked about, tariffs. In many cases, the small business owner has a single supply chain. They supply to one business, and they're concentrated on that business. And if that business is not successful, then that small business can go out of business. So we focus on them a lot. We know a lot of folks that are doing projects in Central Ohio. We're in touch with them. We listen to them. We hear their story, and we try to meet their needs.
Yeah, very good, very good. Let's talk about innovation. By show of hands, how many people out there know what fintech is? Oh, quite a few. Okay. Well, you see my hand didn't go up quite as easily, right? So we have a panel here that can talk about that. Let's compare traditional banking with fintech and digital first models. And what is fintech and how does it interact with your banking institutions every day?
I'll start there. The fintech organizations they're very necessary. So you think of the guy in the garage that's got a design, that's thinking. That's always a threat to any traditional banking model. That guy that's in the garage is coming up with a new product, a new service that's going to disintermediate your business. So when I was at a larger bank, we chose to partner with those fintech organizations. So to find things that they were doing that we couldn't do, and we operationalize them to make them more efficient, to make them bigger. You look at the payment systems, you look at a lot of the companies now that are very mature, like Venmo and Zelle, and you look at PayPal and places like that. They were all fintech startups. The primary difference is how we collaborate and how we work with them. As a small bank, I've got a lot of different vendors that we use that are fintech organizations to help us reach areas that we don't have the expertise. So they're necessary. And they're finally getting a little bit of regulation put around them. So that's going to be a little bit of a challenge, and it's going to slow them down a little bit. But some of us need it, some of us not. But that's the fact about being in the financial services. Once you handle people's money, they're going to find you. They're going to catch you. The regulators are going to come in and slow you down a little bit.
And this is a question that I think the rest of the panel can answer. Talk about some of the emerging technologies that are transforming the customer experience and operations. Becky?
Sure, I'd love to chime in on that one. Running a large operation for us, it's really essential that we lean into some of these emerging technologies because if we don't, we will get left behind. And when we think about the use of AI, large language models, one of the things that we've done in our organization is put a large language model that is homegrown to our firm in the hands of all of our operators and encourage them to learn, to discover ways to do their job better, differently, et cetera, and to take out some of the mundane things that they probably don't like spending their time on, to then encourage them to find ways to really light up really great customer experiences. And so we're finding these tools to be additive to their toolbox when they're interacting with customers, to giving them insights and things to really make great customer experiences. And then in the back end, I mean, think about, I work in the mortgage servicing part of our business, so much paper, so many documents, so highly regulated, and the technology is really amazing, being able to read forms and put them into our systems that in the past we literally had to have people staring at, comparing documents, doing data input, et cetera. And so we're really excited about the opportunity that lies ahead in our ability to just operate more efficiently and operate more with our customer at the center, giving our associates the insights that they need to make really great experiences.
So technology is at its core, it's about making things cheaper, faster, more secure for our clients. That is not a trend. It's not something that we're going to do this year and then maybe figure out next year. That is absolutely a culture. At Bank of America, we spend $4 billion plus annually on new technology, which is codes, applications, software, engineers, to try to make it cheaper, faster, more secure for our clients. A great example of this, when you think of AI and how it helps our consumers, the Erica platform has more than 20 million users. It's been used more than 3 billion times. I've used it several times. What's my routing number? How do I send a wire? Where do I do this? That is an experience where A, I didn't have to call into an 800 number and smash through a voice recording. And then B, it's the bank not having to staff somebody in a call center and pay for that. And it's just a significantly cheaper, faster, more secure solution.
Absolutely. Jordan, Ilaria, any added thoughts? Okay. All right. Sounds good. Let's move on to talent and workforce. Describe how you're attracting and developing talent here in Central Ohio.
I think we're in a unique position. We are a very entrepreneurial we have a very entrepreneurial mindset in Fortuna, yet in a heavily regulated industry. So those dreamers that are kind of in banking roles that never necessarily get to dream, I think get to do that a little bit with us. We're growing. So it's been somewhat easy for us to find talent, but we're also talking really, what we found very important is connecting beyond just the job itself, but how do we connect with the person? How do we make sure that they have a balanced home life? And how is it person first as opposed to company first? And that's something that has really resonated with the team and with the staff. And so I think we'll see more of that to come as we continue to grow.
Very good. Other thoughts? Jordan?
I'll just mention talent. It's many years ago, my boss told me that, Jordan, I don't care what strategy you have. The best strategy is to get the right person. So once you get the right person, all of a sudden your strategy starts working. So that's what we do at Adelphi. We find the best people we can find that'll come and work for our meager salaries because we can't afford to pay them very much. And we find entrepreneurial spirit, and we find people that really want to connect to the customer and connect to the community. So I'm sure the bigger banks have very similar thoughts, but here you're not wearing one hat. You're wearing 5, 6, 7 hats because you got to empty the trash on your way out. That's the kind of bank we are.
Absolutely. And if you all could identify some of the key skills and mindsets that you all look for when you're hiring banking professionals, because the bank of today is not the bank of yesterday, right? And we know that there's a very special skill set that one needs to be successful in the banking industry.
I'll start. The top of the list for me is curiosity, and we talk a lot at JPMorgan Chase about our values, and curiosity is right there on the list of top 5. It is exactly what was just being said. You find really smart people that have the drive and desire, and they're curious to learn. We can teach them banking. We can teach them whatever the function is that they're supporting within the bank. But that desire to learn, to grow, to think about things differently and challenge our status quo is what will help us be successful in the long run.
Sure. Brian?
You know, the quality, that I talked to my team about, it's the first thing we look for. I say the person has to be a good person. They have to be somebody who's going to want to be part of a team, want to be part of a good culture. They're going to want to be part of the community. They're going to want to answer a question when they get a call. And they're going to want to be part of that whole experience and help shape the culture that we have. Beyond that, obviously, making sure that we're training them when they come on board. We have an award-winning academy platform that trains the people so that if they have the skill set of being a good person, they have a skill set of a certain background, that we can help fill in the gaps and so that they can have a successful career.
Sure, absolutely. So we've seen some new banks come into our region. You know, you're seeing examples of 2 of those institutions here on our panel. Reflect upon how increased competition is reshaping the banking landscape here in Central Ohio.
Well, I moved back to Columbus from Cincinnati back in the mid-2000s, and one of the challenges that I had as a banker was the competition. Everybody wants to come to Columbus. It's a great region. It's a growing marketplace. It's innovative. You're seeing a lot of different types of businesses, very diverse economy, and people want to be here for those reasons. That's what banks love, to be in good, healthy communities, because typically banks don't shape the community. Banks thrive off of the community. So if you live in a healthy community, you've got a chance for success. And that's what the banks see, and that's why competition is so heavy here. That's why Ilaria started her bank, and that's why I started my bank, so I could pick off some of these guys' business. Not really, but it's very competitive environment, both interest rates, doing deals, finding loans, finding ways to help people. We all have a unique model, and everyone has a similar mission, but we go about it in slightly different ways. And it's, like I say, the competition drives your response.
I'll add, there is significant competition here in Columbus, but as the newest bank in Columbus, we have found the most phenomenal partners within the banking community. And that's been probably, to me, the most heartwarming piece of what we've done, is that I know I can call Jordan and ask him a question and he'll give me answers. Or I can call some of my partners at Park National Bank and they'll help. There have been people who have done it before and that have helped us along the path of this journey of opening our doors. Just, if you do follow me on LinkedIn, you know that I asked for Venmo help. We couldn't get connected with Venmo. I mean, it was a nice response to be able to see the community come back and help. And that's been fantastic. And I think that we all play in the same sandbox, but we're there to hold each other's hands, recognizing that everyone plays a unique part in our communities.
Sure. Other thoughts?
I mean, I think you said it very very well. I think the competition only encourages good things for the customers at the end of the day. It encourages us to think about how do we move money faster? How do we make sure that we're most secure? How do we make sure that you have access to everything that you need access to from a banking perspective? And we've all long said that when one of us thrives, the other of us can thrive, and having that healthy banking ecosystem is essential for all of our success.
Absolutely. Brian, any other thoughts before we move on?
Yeah, competition is good. It creates a better outcome for customers, for consumers, for businesses, because they're going to get more competitive terms. And it's very good for banks because it forces us to think about how we're serving clients and how we're serving the community and what our reputation is in the community. So competition is good. I think you made a fantastic point. If you notice beforehand, there's a lot of bankers here from a lot of different banks, and it's a lot of very, very friendly conversations happening. We know all the banks here. I know all the banks pretty much across the state of Ohio. We're all on the same journey. Yes, we are sometimes chasing the same customers, but in a lot of instances, a lot of companies, a lot of customers that we're banking also have multiple banking partners, and it's about us working together to serve that whole community.
You know, as the technology gets better and stronger for banks, so do the thieves, right? So when we talk about risk and regulation, describe your top risks that your leadership is focused on, whether it be economic, compliance, or cybersecurity, and how do you deal with that?
I'll start. Basically, as a new bank, you know, we see the regulators every 6 months because we like them. Can you come back again in 6 months? No. I mean, they're over a lot of issues. Obviously, our chief risk as a new startup, I would say, is credit. You know, we're seeing loans that probably get turned down at a lot of other places, and so that loan is typically the customer that we're seeing can't be served by a certain bank because of their credit metrics. That's the one we're seeing, and that's the one we're helping. We're helping people at the lower end of the economic spectrum, and so those loans are a little bit more risky. We also see cyber risk. We see as a new bank people trying to, you know, cash a check that, you know, they stole from a mailbox, or other spamming or phishing expeditions. We see a lot of that kind of thing as well.
Yeah, I can chime in. I spent a decade of my 22 years in risk management, so this was a question near and dear to my heart. And obviously, lots of risks going on out there. We talked about just the economy, geopolitics, but cybersecurity is one that I definitely pause and focus on. Not just, you know, customers themselves kind of being involved in fraud, but otherwise getting scammed. Terrible things going on out there, and just generally, banks do get attacked as far as cybersecurity is concerned, and so it is essential that we have best-in-class capabilities to detect and thwart those attacks. When you're moving $10 trillion a day, as we do, it's table stakes, and you cannot get it wrong. And customers trust us to safeguard their money, and so we heavily, heavily invest and worry about what's next related to cyber risk.
Any other thoughts?
Yeah. We obviously think about all risks. We probably spend a lot of time on credit risks, although in a lot of times, and especially now, credit quality is actually very strong. Where we spend a lot of our time, though, with clients, customers, both big and small, is on the cyber risk. There's almost not a week that goes by where a client hasn't been attacked by ransomware, or somebody in their payables department has sent a wire, sent an ACH to a fake account, and we're trying to help them retrieve those funds. So it's where we spend a lot of our time. We bring in a lot of resources. We like to say we have global resources. We have huge budgets specifically geared towards helping our clients and trying to protect them from those risks, which are absolutely all over the globe.
Very good. All right. I think we'll take one more question before we get into some audience questions. Is that okay with you all? I've heard a lot about our housing deficit here, affordable housing. Share some innovations and partnerships that expand access to affordable housing.
I can start there. We work very closely with the Affordable Housing Trust. We also work very closely with linked deposit programs that are from the county. There's a program with the state of Ohio for Home Buyer Plus program, where People can put their money to save to buy a house. But what the linked deposit program and affordable housing does is it helps them to buy down the rate. So it makes the loan to the project developer more affordable. So we work closely with them. The linked deposit program, the county will give us a deposit, and rather than us paying them the interest, we'll use a piece of that money to lower the interest rate for the borrower. So we're seeing some very innovative stuff there, and it's obviously much needed in this market that's growing. And housing is, you're talking about competitive, it's very, very competitive. You've seen rents rising all over the place, and so this is just a way that we can help do our part to make things more affordable for our customers.
I mean, obviously, lending to builders to build affordable housing units is a space that we're very interested in playing in. And then also on the consumer side, home buyer grants, we offer grant programs that about 50% of the addresses here in Central Ohio qualify for some of those grants. And then we have a portal that connects buyers to ways that they can have other access to down payment assistance. And so just making sure that people understand, a lot of times you're in the home buying process and you're working with a particular person, and that person has their limited set of knowledge, making sure that people are really educated and knowing where to go for that help, because there is a lot of it out there. It's just making sure that customers have that awareness.
Very good. Very good. Well, thank you so much, everyone. Really appreciate your insights to the questions that's been asked thus far. You know, it's CMC's longstanding tradition to answer audience questions. So we'll move into questions from our live stream and in-person audiences in just a few minutes. If you do have a question, please make your way over to the microphone now. You'll see Doug over here has his hand up. And if you're joining us on YouTube, please type in your questions into the chat. Before we take audience questions, panelists, I have just one more question for you. Or are we ready to go to live? I got one more question. Share your vision for the bank's impact on Central Ohio for the next 3 years. If each of you can just give a quick response to that.
As a de novo, when we get to the end of 3 years, hopefully we are able to exit our de novo space. So that's one goal, but really become more deeply embedded within the Columbus community. Our mission, we started as a bank to be here for female entrepreneurs and female consumers. We want to be a great bank for everybody, but we would really love to formalize and build out the mission of creating access to capital, networking opportunities, mentorship, and financial education for those female entrepreneurs.
And just real quick, what's de novo for the folks that don't know?
De novo is a startup bank, so a bank that's built from the ground up.
Great, thank you. Jordan.
Thank you. We're still in that de novo stage as well, hopefully out soon, but our vision is to provide opportunities for people to build wealth. Columbus has been a great town, and you've seen a lot of growth in this market, but not everyone has participated. So our job is to get to the people that are not participating, to get them on the economic ladder so they can be participants in this great market that we live in, and they can grow their families and spend their money and do things that everyone else wants to do. So I mentioned High Street and Broad Street, but when you get beyond those streets and you get onto the side streets, there's a lot of blight. There's a lot of bad areas. There's a lot of tough areas. And that's our mission, is to try to help in some of those areas that we spend our time cleaning up that area, fixing blight, making sure that people can live in those houses and can afford the rent in those markets. But cleaning that up is a big challenge that we hope to accomplish over the years.
Great. Brian.
Yeah, from a community perspective, it's about how do we do a little bit better every day. So for our team in Central Ohio, you know, we have 690 employees, which is up significantly from just a few years ago. How do we get that to 1,000? We offer $1.2 million, I think, in grants every single year to several community partners. How do we tap into the Charlotte Foundation a little bit more and get that to $2 million to benefit the local community here? And then most importantly to me and our teams volunteer collectively across that 690 employees, 10,000 plus recorded volunteer hours a year. I mean, it is our focus. We spend a lot of time trying to get that number higher. I'd love to see that at 20,000 when I'm back here, hopefully in 3 years.
Great. All right, so we will take some, thank you very much. Becky, did you have one last thought or no?
Go ahead.
Okay. All right, so we will take some questions from the audience, Doug, if we're ready.
Derrick, thank you very much. Thank you so much to today's panelists for a great conversation. As Derrick mentioned, if you have a question for today's panelists, come on up and join us here at the microphone. If you're watching online, please do type your questions into the chat. We'll try to get to as many of those as we can. Great questions at CMC, for those of you who may be joining us for the first time. They always have two things in common. Mindy, I know you know this. They take just a few seconds to ask, and what punctuation mark does a question actually end with? Ends with a question mark. Thank you very much. I will launch us off with this one. It's for Jordan and Ilaria. Your banks are both startups. What does it take to start a bank? I imagine there's some partnerships involved and maybe a little bit of paperwork.
Go ahead, Ilaria. You're the newest.
It takes probably 3 years, a 500-page application to the regulators, $20 million to $25 million here in Central Ohio, and a community that believes in what we're trying to do.
I'll just add, it takes a lot of uncommon sense. It's a venture. It's tough. The thing about a startup bank is we don't get any breaks. We got to go out and raise the money. We got to do every single thing to put the bank together with the application. We have to put the whole team together. We have to develop the policies, the procedures, and everything else that goes in it. And we have to be profitable. And so it's a real challenge. And having the right people around you is really key and critical. But you don't get any breaks for being a new bank. They don't say, oh, okay, we're going to wait. We had a CRA exam. We weren't even open for 8 months. We had a CRA exam. So, which is how are we serving our community? So stuff happens, and like I say, the first time they came into our bank, they had 16 regulators, and I think we had 12 people. So, and then they come in every 6 months. I said, well, I don't know where you're going to sit, but but we got a lot of support from a lot of the larger banks, and some of them helped us with capital raise, and some of them are helping us with technical assistance. So.
Mindy Wright, member of the program committee. I applaud Adelphi and Fortuna's goals of expanding access further into the community. Given the national and state pushback against DEI, what kind of challenges is that creating for you?
That's, well, so our bank was started because of the death of George Floyd. That was the idea behind it. That's what created the momentum. And since that, the momentum's changed. The environment's totally changed. And a lot of initiatives around DEI are not even allowed to say the word in some places. So it has caused some challenges in raising some deposits. But it's also many, many, many supporters. They don't say the name, but they're very supportive, and they get it. They understand the environment that we're in. Most people are friendly. Most people are passionate about what they do. Most people want to support. Most people want to see you win. I think there's more people around that want to see you win than see you fail. So for us, we have to live with it. But the day's impact so far has just been negligible, I would say, so far.
Just to add to that, I don't think it changes the story of who we are trying to impact and the fact that there are those challenges still out there. So it makes what we're doing really meaningful in that we are really trying to be intentional in supporting those spaces and making sure that maybe the public attention has dwindled a little bit or the sentiment has gone down, but that's, I think, reinforces our need to be here. But we are actively raising deposits, so if anyone would like to open bank accounts with us, no? We'll share.
Hi, my name is Tatiana. I'm actually with Ohio Credit Union. But I did have a question. I've been in finance for 10 years at a bank and then 1 year at a credit union. And there has been a lot of talks about like turnover, retention plans, and things like that in the financial industry, especially due to like AI. So kind of wanted to get your guys' thoughts on maybe your retention plans or if any of the turnover is due to AI.
I'm glad to take the AI question. I mean, we've been really intentional, again, about talking about how it can augment roles. And yes, absolutely, over time, there will be roles that go away. However, when you think about normal attrition and things, a lot of that will like just happen organically. And we can say maybe, you know, hiring plans for this specific area that may be impacted, we would adjust. But what we've found so far, where we've had successful AI implementations that have impacted roles, we're so large that we're able to redeploy those folks elsewhere. And so we have the roles that have been impacted, we've said, hey, we're going to intentionally place you in this other spot that is hiring. And so at the end of the day, efficiency doesn't necessarily have to mean the employees go away. It means that you can grow and serve a larger number of customers with the same set of employees and capabilities.
My name is Eric Astad. I'm with Carlisle, Patchen, and Murphy. And on the subject of technology, do you see cryptocurrency as competitive or disruptive to the banking industry in general? And what are the trends as far as banks are considering approaching cryptocurrency technology?
Go ahead.
I'll start with that one. So, I mean, if you think of stable coins and cryptocurrency legislation, I mean, it was very recently passed. So it's something that the banks are just starting to explore, especially the bigger banks. I think when you kind of look deeper into cryptocurrency and what it is, especially when you think stable coins, because that's probably the main application, it's really another form of payments. It's no different than cash, credit, ACH, wire. It's a form of a payment. And there's no doubt that one day will stablecoin become a payment that competes with credit cards, competes with ACH or wire. Will it one day be how we pay for parking on the way out of an event like this? I'm not sure if it'll ever be easier than credit cards, but it's definitely an area where now that the legislation's been passed, we are spending a lot more time thinking about, but mainly thinking about where's the consumer going with it, because ultimately we're all up here to meet the consumer and to try to help them be more successful.
I don't have anything to add.
I'm Jake Martin. I'm a millennial, and I don't remember the last time I stepped in a physical branch at my bank. I'm just curious what you see for the future of physical bank locations, given the migration to the digital world and the fact that people don't have to go to their bank anymore to do all of their banking. I'm especially curious from the startup standpoint what that means for attracting new customers who may not see you if you don't have a physical location. So if you can just reflect on where you see the future of physical bank locations in the next 5 to 10 years.
Well, at our bank, our bank was intentionally designed to be one branch. Future expansion is all digital. At least that's our thought. We may have some hub locations later, but right now we're just providing digital access, and we're at a point now where we're starting to think about how we're going to market to those people that just live on the west side of town. We're on the east side of town. How do we get to those folks? People come from all over the state. They find out about us, and they want to make a deposit, or they want to get a loan from the bank. So we serve multiple communities, but most of that is done through digital access. So we have to be smart about it, because there's a lot of crooks out there that are looking to infiltrate the banking system and throw haymakers in there, or threats or cyber or whatever. But that's our thought about expansion. So not with bricks, but more with clicks, I guess.
And we're really aligned in thought there that we have one location here in Central Ohio. If we expand, it might be to a second city. But I do challenge, and I'm always the first to say, if I didn't work at a bank, I probably wouldn't want to walk in a bank myself. But it's only when you need a banker that you think about you need a banker. And at that point, you're generally in trouble, and you need something, and it might be more difficult. So I do encourage everyone who doesn't visit a bank or doesn't like to go into a bank or really relies on digital technology to connect with a banker, because they're there for you. They should be by your side. They should be in your cell phone so that you can text them. I think many businesses experienced challenges during COVID and getting PPP dollars. And so there's a genuine importance to having a banker that you know their name, not just the brand.
I think to that end, Ilaria hit the nail on the head, which is why, as a large bank, we've been a bit of an outlier, continuing to invest in brick and mortar and saying it's an and strategy, digital and physical, because what we find is that the customers' consideration for considering Chase is higher when they know that there's a branch on the street corner. To your great point, I don't usually have to go in there, but the safety of knowing that somebody is there to help me with my problem, and I don't have to, wait on the phone and hope somebody, once I get through the IVR, can help me, but that I can walk in on that street corner. We find that highly correlates to driving growth in markets, and so we are investing in both.
Hello, my name is Amy Vogel. I'm not a millennial. It was just fascinating and refreshing to hear the focus from each of you on the customer experience. And I realize that the financial industry is a very tough space to operate in. So I'm wondering if each of you could share a feel-good moment. And by that, I mean something that you or your team did that made a positive impact for your customers.
I'm looking at my comms person because I have the best one. We just had our Employee Appreciation Week this last week. And I run, like I said, mortgage servicing. And one of the departments that we have is called Customer Life Events. And their job is to help customers that are maybe going through divorce, death of the borrower, et cetera. And we had one of our agents who took a phone call from a woman whose father had passed. She didn't know what to do. She didn't know if she needed to continue to pay his mortgage. And he said, I know what to do, and I'm going to help you through this situation. And she took to social media. Her posts ended up getting like 1 million likes. And so we had a media team actually go talk to the employee. We talked to the customer about her experience, and we packaged it all up in this great employee appreciation video that went literally went to the hundreds of thousands of employees that we have in the company. And it was the most special moment in just seeing that he had empathy and compassion. And this is where all these AI questions, you will never AI away the empathy and compassion of a human helping a human with a problem. And it was a really, really great story. So thank you for asking that.
Potter, and I'm speaking as a board member of Capital Community Development Corporation, who facilitates SBA loans here in Ohio. And I know how important it is on our board to have people who are engaged and know about small businesses here in Central Ohio. And I just want to ask, where are the decision makers making the decisions in terms of small business loans with all of your institutions? Thank you.
Love that question. I have got our chair of the board at the table there, Lisa Berger, and Michelle Hassling, our chief lending officer, and myself were the decision makers along with our board.
I'm the same way. Most of the credit decisions I'm involved in some way, some shape or form, but I've got a nice credit team. Their answer is, their direction is to try to find a way to say yes. If it's not a yes, it's a how. And we're very local. We can cut through and change a policy in midstream. So we're very focused on that individual's situation and their solution and trying to bring the best we can to get them where they need to go.
Yeah, and we have a very large small business team, which includes a very large credit team, which Aaron, my colleague, started at a number of years ago up in Westerville. So we have a large operation right here in Central Ohio.
Yep, and then we've got Janice here from our small business team. You want to say hi?
Great. Well, this has been great, and thank you so much. I wish we had more time, but I've gotten that, I got that look from Doug, and he was like, we got to wrap this up. So I'm going to turn it back over to Sophia, and she's going to give you some concluding remarks. Thank you.
All right. I really hope that everyone enjoyed today's conversation. Our mission at the Columbus Metropolitan Club is to connect people and ideas through community conversations like this. And oftentimes, as a nonprofit organization, we focus on storytelling connected to social issues, social justice, things happening from a policy standpoint, but we also focus on business priorities for our region. So for those of you who are tuning in online and for those in the audience, I hope that today's conversation sparks some ideas for how you can show up in your bank, in your corporation, in your business. You have 4 great institutions here in Central Ohio who I heard a great message of empathy, of compassion, of care. I've had the opportunity to meet several of our speakers previously, and I know how deeply they care, not just about providing banking services for businesses and individuals and institutions, but how much they care about Columbus neighborhoods. So I invite you to learn more about them, to follow their organizations, to bank with them, and also to come back. But before we conclude, I would be remiss if I did not thank our forum sponsors, Bank of America, Charlie Pratcham Murphy, Meaden and Moore, JPMorgan Chase & Company, and Taft. Let's give them a round of applause. We are also incredibly thankful to Downtown Columbus Incorporated for providing today's complimentary parking. We all know how challenging it is to find parking downtown, so we're so thankful for the complimentary parking. We're thankful to our presenting sponsors of our live stream, for those who are tuning in virtually, the Center for Human Kindness at the Columbus Foundation, and our live stream partner, the Columbus Dispatch. Thank you to National Veterans Memorial and Museum for hosting us in this amazing space, and a very special appreciation to all of our panelists, Becky Griffin, Brian McDonald, Jordan Miller, Ilaria Rawlins, and our host today, Derrick Clay. Let's give them all a round of applause. All right, for those of you who are not familiar with the Columbus Metropolitan Club, we do this every single week. We host a conversation just like this. So I want to invite you back right here at National Veterans and Memorial Museum, Wednesday at 11:30 for How a $1 Billion Ballot Will Reshape Columbus. Right here in this building, we're looking forward to a great conversation. See you next Wednesday. Thank you so much. Okay. All right. Yeah, thank you.